Sherwin-Williams company is obviously a paint company. They're one of the biggest manufacturers of everything paint, coatings, really anything involved with the manufacturing of paint products. Sherwin-Williams is really the leader in. They currently have a market cap of $82.46 billion, a price to earnings ratio of 32.83, an annual dividend yield of 0.96%, a 52-week high of 400, and a 52-week low of 308.84. Now, Sherwin is currently trading more near that 52-week low. This makes me think that there potentially could be some value here. I really like Sherwin-Williams because I think that they are the undisputed leader in paint products. Their paint products are really preferred by a lot of painters, even though they will use some of the alternatives. They aren't as high quality of a product, in my unprofessional opinion. Every time there's an opportunity to get into Sherwin-Williams, it makes sense. I think that this is a more easy business to understand. It's a more traditional business. So we can use our modeling, but we also have to factor in the fact that there needs to be some kind of premium for just the amount of products that they have and the scale that they're at. I really think that being such a large enterprise and being involved in so many things, I think that Sherwin-Williams really needs to command some kind of premium for that. I also think that we need to look at some of the trends for just overall construction. So if you're a believer that we're going to continue to build more infrastructure, which I think is very possible under President Trump, because that is something that he's always stressing is really beefing up the infrastructure for everything. Those things are going to need to be painted, and I think Sherwin-Williams could benefit greatly off of that. I think that their business model lends for a lot of growth, but I really think that Sherwin-Williams is just a very strong business, and I think that they have the ability to continue to be able to really grow as long as there is, like I said, more construction and more use for paint. And I really think that that's the case. I think that at least domestically, we're moving towards that way in the Americas. I know that they've also penetrated other markets and that those are kind of the higher growth segments of the company. But I really do believe that even in a very conservative estimate, this is a good stock to be able to park your money, to be able to retain some value, especially while we're here, again, down 14.99% over the past year. You're definitely not buying the top in Sherwin-Williams, but you do have to know that you are getting very stagnant revenue and a well-balanced company in terms, or well-financed company, I should say. If you're a long-term investor, one thing that really makes me kind of hesitate to pull the trigger on this stock is that, again, I think that Sherwin-Williams is really in every place they can possibly be in, and I don't see a lot of vectors for growth within the company. It reminds me almost of like a very similar company to Coca-Cola, where you have a lot of value, you have a lot of quality, but you also really have a lot to lose because you're in such a dominant position in the market, and there's not really a lot of growth, meaning that it's almost like buying a bond with a pretty decent low interest rate that's very reliable, but you're still getting all those risks that competitors could come in and take your money. So that's one concern, just to kind of play devil's advocate. But I really do think that Sherwin-Williams is probably undervalued here, just because I think that it should deserve some kind of premium, because I think that real companies like this are really being overlooked during the whole AI thing. And I think that AI is still going to benefit companies like Sherwin-Williams, because eventually their employees will start implementing it into their work and you'll see new efficiencies. Or maybe Sherwin-Williams will adopt a software that was created because of AI. There are a lot of things that could happen that could definitely evolve Sherwin-Williams, and I think the technologies are probably leaning more towards positive than negative. And it would make sense that this company should command a certain high premium because of, again, how big it is and because of how ahead they are in paint technology. That's definitely something that you need to understand if you're investing in Sherwin-Williams. It has to be that, in your opinion, their paint is of higher quality. I think that that's something very important to consider. And if you are thinking about investing in Sherwin-Williams, you probably should research this and have like an opinion on it. I think that Sherwin-Williams products are vastly superior to a lot of the competition, but that is a personal, non-professional opinion. Here we have my current model showing that there is actually 5.83% upside, but that is also with the growth rate at the same as the average free cash flow growth rate. We can see that the revenue is only growing at 3.81% as these new data centers are being built out, as the infrastructure is being replaced through efforts of the Trump administration. I think that Sherwin-Williams is a massive benefactor, and I still think that this company is very necessary. I just have fears about the growth. And if you see me put in like a growth of 10%, which I think is an excellent growth rate of the free cash flow, you can see that Sherwin-Williams would be a sell. And this number is also very misleading because Sherwin-Williams actually did buy back a lot of stock and pay back debt, but they do so in a way so that the free cash flow annually is still showing that it's growing, or maybe they're doing it in a certain percentage each year. But just so you know, they are spending on things like that. So you are getting a decent amount of value in that way. So you're getting a combination of dividends and share buybacks, which obviously reduces the number of outstanding shares. And by doing that, you're basically lowering the denominator in a fraction, which means that there's basically more of the company within each share because you're eliminating open shares in the market. Overall, I think that this is a very safe, good play right now. I think that over the long term, Sherwin is going to come back. I think that these are some irregular down years, and I do think eventually we're going to see things kind of go Sherwin's way. But I wouldn't be surprised if part of why they're being hurt is also China tariff tensions. That's definitely something to look out for. But I would also, if I was wanting to invest in this, I would want to invest a little bit now, then wait to see what the earnings are, and then decide if you want to continue buying. I think this is a company that has legs, meaning that I think it can continue on into the future for a very long time. I think that there is a lot of competition in this industry, though. I don't really necessarily love Sherwin because it doesn't have a monopolistic position, but the margin on the products is quite good for the most part, but there is a lot of R&D as well because they're constantly trying to look for new products, which I suppose that could be a sign of growth, or that could be a way for more growth. It's very hard to tell with Sherwin-Williams, and it's a difficult industry to really gauge. Then I wouldn't recommend necessarily investing in this unless you want to own it for the very long term, and you want to just continue buying as it dips lower. I would definitely dollar cost average. I don't know if I would go all in on this. I do think that there is some potential, though, that it could be undervalued, but I think it's somewhat difficult. I don't know if they can sustain 14.28% growth of the free cash flow, but historically they have been able to, but the cash flows as a whole just look really erratic. The revenue looks extremely underwhelming, and for that reason, I still wouldn't necessarily want this in my portfolio. But one thing you do also have to consider with Sherwin-Williams actually is that the expectations are in the toilet, then that's pretty good for your company because eventually they're going to be able to outperform and do well. And oftentimes over the long term, those can be some of the best sources of value. So there's definitely a lot of different positions you can have on it. When I'm not super confident on something like this, I tend to just want to say, I'm not going to invest either way. I definitely think that there could be some value here, but I just don't think that this fits all the requirements that I want within my personal portfolio. I think that this company could be very good if you wanted to live off of dividend income and you were somebody who was maybe on the older side, because I do think that it's a very secure company. There definitely isn't too much debt. I think it's very sustainable. I think they have a strong balance sheet, and I really think that Sherwin-Williams makes a very solid product objectively. And yeah, that's kind of my review on Sherwin-Williams. I think that it's a very strong company, but the revenue has not grown in the way that it's supposed to. I'm also very concerned about China just because I'm sure a lot of the products are manufactured overseas and the supply chain's not all here, as that's the way everything's always been run. I think that this company is very good, though, because, again, you're having to contribute significant capital to your inventory, and that's very inflation-proof. I also like the business model that they have where each individual manager kind of runs their store, and then they get bonuses based on how well their particular store runs. So it kind of incentivizes you to sell more than you did last year. Overall, I think Sherwin's a great business, but again, not right for my portfolio. I don't think it's necessarily cheap enough for me to really want to be interested in it. Yeah, that's my review. Thank you guys for watching. Hope you guys liked. If you guys liked the video, please hit the like button. Please hit the subscribe button if you want more videos like this. And yeah, again, thank you.